Hey, what's up guys? It's Ezekiel here. So let me hit you with this. What if you could instantly boost your win rate without changing a single thing about your current trading strategy? I mean, it sounds crazy, right? But it's real. The truth is that most traders, they lose not because their strategy sucks. It's because they trade in the wrong direction. For example, you buy when the market is about to drop. And then you sell when the market is about to rocket up. Why would you do that? It's because what you are seeing is a fake move, a trap to grab your liquidity. But today I'm going to flip the script for you. I'm revealing the easiest way to fix this using the change of character and 3 simple keys to spot the real trend, and then you can avoid ever getting faked out ever again. So by the end of this video, you will keep your same strategy if you want to, but your win rate, it will skyrocket. Okay, so first off, what exactly is a change of character and why does it even matter? Right, so a change of character happens when the market slows down, right? Showing what? It goes up and then it slows down, showing a possible shift in trend and order flow. So it's usually the first sign that the buyers or the sellers might be losing their control. So for example, it's the uptrend, the buyers might be losing control. It's the first sign that lead to a possible market reversal. All right, so now let's see how can we identify a valid change of character in the market. Note that I say the word valid. All right, so here's the thing. A change of character, it occurs when what? When the price, say after an uptrend with higher highs, right, and a break of structure, it breaks and closes below the most recent major low, right, and the demand zone, right, with a candle body closing below it. So this signals a potential shift from a bullish to a bearish momentum itself. If you see, when price is in an uptrend, it's constantly forming a series of bullish structure breaks, right? So this indicates strong upwards momentum, right? Now, then there happens a shift in market structure, right? When price breaks through the most recent major low and the demand zone. So this signifies the first change of character, okay? So now, the downward momentum continues as price breaks through the next demand zone, right, which is a higher low, right? So resulting in a second change of character. So this dual change of character suggests what? Potential shift in market structure, right? So now, after price broke through multiple demand zones, what happens now? A supply zone forms at the extreme, right, which is at the top. So as a result, what happened? We would expect price to move higher towards this extreme supply zone if it reacts to it, right? So then what can we do there? Right? You can enter the market by placing what? Sell positions with the expectation that the price will form consecutive bearish break in structure to the downside after which. So now, looking at the chart, we can see what? We can see that after the extreme zone is addressed due to a change in price action, price turn around, drop lower, right, and broke below the recent low, right, and closed beneath it, right? So after that, price pulls back again, right, went up again, and then reacted to the other supply zone itself, right? So what? Then price continued to push down, breaking another market structure, right? So this is typical. right? This is typical. You can see this is how the market structure works. And this is why there's always supply zone, demand zone, right? But understanding where the change in trend would come from an uptrend to a downtrend is actually really important because, for example, if you have not realized that the market has changed to a downtrend, you would still be thinking, oh, this is just a retracement in an uptrend, I should continue to buy. But no. The market has actually already changed to a downtrend. So instead of buying, right, when it goes up, you should actually wait for it to head up to the supply zone to go for a sell downwards and not thinking that the market is resuming its trend upwards. Okay? But here's the thing. Change of character happens all the time, right? With price breaking all the previous, say the higher lows, it could always break the previous higher lows only to resume back its original trend and then continue to hit its way upwards. So this is like the killer that fixes traders into thinking that, oh, okay, now the trend has changed because it broke the previous low and now has changed into a downtrend when it's actually still in an uptrend. This is the killer. Right, so now I'm going to show you the 3 main keys of what separates a valid change of character from a weak or a false one. Okay? Hey, Ezekiel here. So let me be real with you for a moment. I mean, I've seen this over and over again, right? People struggling to keep up as prices climb. So here's what most of them they get wrong. They think that savings is enough while everything like around us gets more expensive. I mean, the groceries, bills, and even like the basics, they aren't so basic anymore. And with your bank interest kind of like barely keeping up with inflation, your money is losing value by the day. So now, I teach people how to grow their money in the markets. But I'm also a big believer in being smart about where and how you start. So with that, I've known XM for a long time. I mean, it's one of the more established platforms out there. And over the years, I've seen how they continue to make trading more accessible, helping new traders get started with the right foundation. And in fact, they are offering a $50 bonus for first-time users with no deposit needed. So you can learn, test, and trade without even touching your own capital. Even better, they run demo competitions. So you can trade with virtual funds, go head-to-head with real traders from around the world, rank well, and you win real prizes. So I'll just drop the link below and you can check it out yourself. And I'll say this, right? In this economy, staying passive is the most expensive move that you can do. The key number 1, higher time frame mitigation. So the first key that must be met in order to identify a valid change of character, everybody can talk about change of character, but now we are talking about a valid change of character, is the higher time frame mitigation. So now, a change of character is valid if price reverses and starts, and for example, it's going up, right? And then it reverses and starts from a higher time frame supply or demand zone before breaking that major structure, that lows, for example, triggering the change of character. So it got to start from a higher time frame supply or demand zone. So now, if price creates a change of character without interacting with a higher time frame supply or demand zone, even if there is, say, a valid candlestick pattern over there, it cannot be considered a good or a valid change of character. Alright, so this is really important for you to identify all this high probability reversal pattern and to avoid the traps from all these false, in a way, market character changes, and then you change and then you trade in the wrong direction, but when actually it can still continue back in towards the right direction because there is a false one. So now let me give you an example. Okay, so in this bearish market, the sellers are clearly in control, right? So you can see that price has repeatedly break lower, right? And then it creates new supply zone as it falls, right? So now, if you imagine, price starts moving up, it might pause or say pull back a little from the last supply zone. But then it actually pushes and breaks right past it, right? And closes above it. So this happens a lot of time, right? This is a common trap for traders because what happens over here right now is that most traders would miss the bigger picture in the market. So when price moves up like this, they often think that, ooh, this is a change of character, right? Meaning to say that the market is about to reverse from a downtrend to an uptrend now, right? They believe that the bearish trend is over, and they now see that this is a chance to buy now, right? To go long using what looks like now a new demand zone. So what they would normally do is they will then place their stop loss just below this new demand zone. But here's the catch. The market often does the opposite of what they and all these traders expect, right? Which is why there's so much traders couldn't get the direction right, and then they lose a lot of trades all the time, right? And they say that the strategy doesn't work. Okay, I'll talk more on that in a while. So after price makes a quick move up, price might just touch the upper supply zone, and then simply what will happen? Continue back its original bearish trend back downwards. So this, when that happens, this causes a stop loss to be hit for anybody who have bought thinking that yes, already has a change of character, leading to a losing trade. And they'll be like, oh, the strategy didn't work. It's not that the strategy didn't work, right? It's because you traded on the wrong direction. Obviously, you can mitigate that or rectify that if you got out of your buy order, for example, with your take profit, say, at the nearest supply zone. Because when you understand how this works, and you just take a small take profit, because you understand that this is just like a small retracement in a bigger downtrend. So this is a retracement to a downtrend, right? This is not a change of character that goes all the way up. When you understand that, when you are able to read this correctly, you can still trade retracements like this, because you now know this is a retracement and not a reversal. Right? The difference between retracement is that you don't expect it to go too far off, right? Reversal, you can expect it to entirely change the trend, correct? So this is your understanding of the market to be able to tweak from potentially a losing trade into maybe a break-even trade. Maybe just go up a little bit, but doesn't hit the supply zone and then goes back down again, right? To probably a break-even trade. But ideally speaking, you should not be buying at that point. So the key thing that most traders miss is this. Why didn't this work, for example? Why didn't this reversal work? The reason is that price did not reverse from a fresh demand zone, an unmitigated demand zone, a demand zone that hasn't been touched before, right? You should only consider buying if price have reached a major untouched demand zone. So most traders' idea of a change of character becomes wrong. Price only went up. In this case, price only went up to fill the orders at the higher supply zone, right? So you basically use all the last supply zone as a trap, as an inducement area to grab more money from the buyers, right? Before giving it more power to drop downwards. So this whole thing shows that, and why most traders lose money is that if you don't truly understand market structure, it's going to be that you are very likely going to lose money, right? So new traders could have avoided all these losses by understanding the market sentiment and understanding the first key, which is what we talk about, to always look at the bigger picture, right? When you're analyzing the market, right? And it's because price have not touched a demand zone from a higher time frame yet, a fresh demand zone. Good? So that is key number 1. All right, so now let's move on to the second key for identifying the changes or the change in character with high probability. So key number 2, liquidity sweep. Quick pause. If you found this video helpful so far, here's something that always surprises me. 73% of you who watches this video regularly haven't subscribed yet. I mean, if you're getting value and want to support what we are doing, the best way is just to hit that subscribe button. It's free and really helps us to continue creating better content for you every single week. It truly means a whole lot to us. Okay, now let's get back to it. Right, so now, if you look at the structure on a higher time frame, for example, right, say the daily time frame where price is in a downtrend and then it forms a series of break of structure to the downside. So now, after moving up and tapping into the previous supply zone, price reversed and created an unmitigated supply zone, which is now waiting for mitigation, waiting for it to touch to mitigate it. Now that price is moving and pushing upwards, what we can do is, this is a higher time frame, right? We will now zoom to the lower time frame. For example, right, previously the higher time frame is a daily time frame. So now I will zoom down to the 4-hour chart itself, right? So now, in the 4-hour chart, we can see that price has formed a series of higher highs, right? Because in the higher time frame, it's going up, right? So in the lower time frame, it's always a series of higher highs most of the time, right? And higher lows. And it's on its way towards the daily time frame supply zone, right? But just before tapping into the zone, and right now price is below it. Price form what? Equal highs, forming a double top. So equal highs means what? There is significant liquidity right above it, and that is also near the higher time frame supply zone. So what happens next is that you will see price sweep the liquidity above the double top and then tap into the higher time frame supply zone itself, and then reverse the direction after mitigating the daily time frame supply zone, pushing the price downwards, creating the change of character. Right, so now when it goes down and when it breaks below and close below the major recent low, price broke through the demand zone, which is formed by the earlier break structure. So now, when a zone breaks, right, the opposite side of zone would now automatically form. So when the demand zone is broken, that's the change of direction comes in. The change of character will come in, right? So the opposite side of the zone would now be formed, right? Since price broke through the latest bullish, the uptrend, the bullish demand zone, right? So now the opposite side would now be formed, and forming what we call a supply zone, right? So then that will link to what? A bearish wave, right? For a change of character after which. So what you can do, for example, right? You can place a sell limit order, right? At the extreme area at the top, right? As price is likely to go up to feel the inefficiency, tap into that order block, mitigate that supply zone, and then push its way downwards. Now, I'm saying a lot of all these terms because this is the terms, right? But this is how the market works itself. Cool? Switching from in this case, key number 2, where we talk about liquidity sweep, and then we also learn about not just looking at one time frame, but also switching time frames from higher to a lower time frame itself, or from a lower to a higher time frame as well. So now let's proceed to the key number 3, double zone breakout. Alright, so now for a change of character to be, I would say, a lot more effective and have a higher chance of success, price should break and close below or above 2 consecutive supply or demand zones along that path. So now, for example, if price breaks through this demand zone, we would have a double zone breakout, because price breaks out of 2 consecutive demand zones in this bearish single leg movement, right? One move, it broke 2 zones and it closes below the 2 demand zones. This is what we call the double zone breakout, right? And then it leaves all the inefficiency behind. So what happens next? At the same time, when it breaks, a strong supply zone would now be formed at the extreme, right? At the top itself. In this case, same thing. What you can do, you can place a sell limit order at the extreme area, right? Because price has a high probability of returning it to fuel the inefficiency behind, for fueling the orders and then mitigating that supply zone to hit its way downwards. Alright, so now price may push downwards, allowing you to enter in the change of trend, right? At the highest possible spot for the biggest risk to reward ratio that you can get. Okay, now let's put it together on how to use what you have learned effectively. As the saying goes, right? The trend is your friend. And you always want to trade in line with the trend for a higher win rate and also a better risk to reward ratio, isn't it? But you also got to know when will the trend end from an uptrend to a downtrend, such that you're buying when the trend or the trade has already changed. You should look to sell instead, right? So this is where the learning of the change of character will come in. Meaning to say, if the trend has changed, you should no longer be buying, you should be selling, isn't it? Right? So now, as I mentioned earlier, the breaking of, let's say, an uptrend, the breaking of the lows is fairly common, right? And there are many fake outs out there, right? So you don't just want to jump in just because you see a break of higher lows, all right? So this is where the 3 keys that are given you will come in, right? Key number 1, when the highest point that started the change of character in that time frame is a supply zone in the higher time frame, right? This is important because it combines the understanding of multiple time frames, And this increases the probability of this change of character working out as it is a strong, higher time frame supply zone. Okay? Now, number 2, understanding liquidity sweep zones in multiple time frames. So this is where you want to watch for, say, all the stop loss hunting, all the false breaks, right? As signs of accumulation before the actual reversal, right? You can watch this part back. Liquidity sweep zones. Key number 3, double zone breakouts. Right, when price breaks through 2 consecutive zones, right, the confirmation of this change of character, it increases significantly, creating a very strong change of character. Okay, so now, when you put these 3 keys together right now as a confluence, once you have learned how to identify them, right, you can start putting them together. And then it will drastically increases the confirmation of this change of character even more. So now that you are able to identify a real change of character, right, with my change of character cheat code, so this method alone will increase your win rate by a whole lot. Because why? You stop taking trades in the wrong direction. If you take every single trade that has a pin bar, for example, let's say you take 100 pin bars, right? But because right now you understand the change of character, you understand how to identify the real trend, right? You will probably eliminate away 50% of the wrong trades itself, right? Your 50% of the trades itself have a higher chance of working out and moving in the correct direction because you now know that it is a reversal versus, say, a retracement, and you can actually make more money because when you're trading in line with the trend, in line with the bigger trend, the move actually moves bigger. Your risk to reward ratio actually gets better itself, apart from your win rate. So understanding this alone, using this change of character alone, is actually an important thing that most traders miss out. And now you have this in you. Good? So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.